Okay, good morning. Hello, everyone. My name is Jennifer Kohler. I'm a programs consultant for the Chicagoland Chamber of Commerce. Thank you so much for joining us today for our program, Mid-Market Financial Trends in 2022. Before we get started, a couple of housekeeping items. Just so everyone's aware, all attendees are on mute except for the speakers, and we are leaving some time for Q&A at the end of the session. So please put any questions that you might have in the chat. We're pleased to bring you this program today so that we can learn what's on the minds of CFOs during this very turbulent time for business. This program is presented by Mid-Market Chicago, and the Chamber's Mid-Market Chicago program is dedicated to providing the programming, networking, and resources that middle market companies across our region need to grow and to prosper. We wouldn't be able to do the work that we do or host excellent programming like today's webinar without the generous support of our mid-market sponsors, BDO and BMO Harris Bank. Thank you both for your continued leadership, support, and investments in Chicago and in the Chamber. So again, we have several national leaders with us today to walk us through some of the key highlights from BDO's annual CFO survey. We have Aftab Jamil, Assurance Partner and National Leader for the Technology Industry Group for BDO, and Stephen Schill, Assurance Partner and Co-Founder of BDO's Center for Healthcare Excellence and Innovation. Thank you for joining us today to share your perspectives and again for your support of our Mid-Market Chicago program. But before we kick off today's panel, please allow me to introduce Jason Lipschultz, who is Managing Director of Third-Party Attestation with BDO. BDO was instrumental in founding our Mid-Market Chicago program, so I want to take a moment to thank Jason and his entire team for being such tremendous partners to the Chamber over the years and helping us sustain and grow the program. And with that, I'm going to hand it off to you, Jason.
Thank you, Jennifer, and good morning, everybody, or good afternoon, depending on where you might be. Thank you so much for taking time out of your busy schedule to spend some time and really learning about what's on the mind of CFOs across industries, and we're going to dive into a couple of them specifically. So thank you for joining. Thank you to Jennifer and Jack Lavin, the President and CEO of the Chamber, and the entire Chamber for your tremendous support of the Chicagoland business community. We receive a tremendous amount of value. It's being part of the Chamber and really enjoyed the opportunity to present today. So today, as Jennifer said, we're going to be presenting an overview and some of the key findings of our annual Middle Market CFO Outlook Survey. And so this is just one of the many things that we have the opportunity to do being a sponsor of the Chamber, and I hope you really enjoy that opportunity today and other events to come. To give you some brief background, and Aftab will build on this, the survey was conducted fairly recently, fourth quarter of calendar 21 by an independent market research firm. It polled about 600 CFOs across industries at companies ranging approximately from 100 million to 3 billion. But what I tell you is if your company does not fall into that range, what you will find, though, is that the findings and topics are likely still very relevant to you and your business. In addition to technology and healthcare, where we're going to focus today, there's also a deep dive focus on energy, life sciences, manufacturing, and retail. So Aftab and Stephen are going to dig into these areas in a little bit and a little bit further. And again, you'll have access to the full survey, and there'll certainly be time at the end for Q&A, and afterwards we'd welcome to continue the conversation. So just to give you a little background, Aftab Jamil, he's a partner and leader of our technology industry group. And Stephen also is an assurance partner. And as Jennifer said, he founded our Healthcare Center of Excellence, and he's our national leader of healthcare. And so really couldn't think of two better people to speak on these two topics. So thrilled to have them, really appreciate them taking the time. And Aftab, I'm going to turn the floor over to you so that you can start your prepared remarks. So thank you, Aftab.
Thank you, Jason. Good morning, good afternoon, everyone. And let me add to Jason's thanks for the Chamber to organize this event today. And yeah, what I'm going to do is in the next 15 minutes or so to give you an overview of the overall mid-market survey and what we found, and then spend more time on the tech-specific issues. So Jennifer or Lily, whoever is controlling the slides, if you please bring those up so that all our participants can see some of the elements that I'm going to be talking about. And if you go to the let's go to slide 3 real quick. And Jason alluded to the fact that that this is result of about 600 CFOs that we interviewed through an independent research firm. So as you might know, that at BDO we work with many thousands of our clients to serve their needs, ranging from financial reporting and audits to advice on strategic transactions like IPOs and M&As, preparing from their tax returns to sophisticated tax planning, from data analytics to full-scale digital transformation. So we get to see businesses from different vantage points. Now, through this survey, we do try to bring insights that we developed through talking with the 600 CFOs that we interviewed, and I'm really grateful for having this opportunity to share what we learned from the survey participants. Obviously, our focus is middle market, and I recognize that different organizations and different stakeholders define that differently. For the purposes of this survey, we define that population to be companies ranging from $100 million revenues to $3 billion in revenue. And as you can see from the slide that is in front of you, that there is actually a pretty good mix of companies in different bands within that defined population. There is also an excellent split between the public and private companies. Within private, there is a good representation of institutional money. So that is through the venture capitalists or PE firms, private equity firms, as well as private businesses in that population that are not backed by institutional funding, if you will. So I think from the population and the split, it's from our perspective that provides us a very balanced viewpoint of companies with different backgrounds and different sizes, and how the business is conducted, whether their focus is the US market or international markets. And obviously, as Jason mentioned, that this is across 6 industry verticals. So if you go to the next slide, please. I should mention, actually, before getting into a little bit more details, that the survey was conducted in October and November timeframe, and probably you will agree with me that it'll be a big understatement to say that we're living through dynamic times, and a lot can change very quickly. Be it the waves of the COVID crisis that we're going through, and how economy reacts to those, or geopolitical changes that happens, and the current issue and the humanitarian crisis that is unfolding in Ukraine. So while the number of findings that I'm going to share with you do not reflect some of those very late changes, we will try, both between Stephen and I, we will try to call out any pertinent points that we think will have a reaction to some of these changes. It's actually not all that too difficult to see what what markets and CFOs' reaction would have been. When we surveyed, despite number of headwinds that we're all aware of in the marketplace, the middle market seemed really poised for growth. And as you can see on the slides, that about 2/3 of the CFOs in our survey anticipated and projected that their business will be in fact thriving in the next 12 months, both in terms of the top line revenue growth as well as the bottom line profitability. Now, needless to say that, depending upon which industry vertical that you look into a little bit more depth, the answer may differ. So technology or healthcare, that we will be spending a little bit more time today, are obviously in a much more robust profitability projection than say manufacturing or retail. So that's the overall sentiment. Still is very positive and robust business growth. Next slide, please. So while it is clear that the COVID-19 and the pandemic crisis and all the issues that all the businesses of all sizes and all industry verticals are dealing with, it does remain on the radar of the CFOs. But as you can see, that interestingly, that while it's one of the top factors, it is not the most significant risk in CFO's mind as to what will have an impact on their business. Supply chain disruption, which one can argue that obviously is a direct result of the pandemic crisis, is in fact the number one risk factor from a future growth standpoint. But nevertheless, that does show and highlights that the resilience is just of the businesses and sustainability of the operations is just not limited to the crisis timeframe, but it goes well beyond that. And of course the talent shortage, and we will be spending a little bit more time on those dynamics as well. Next slide, please. While the growth ambitions are pretty high, as I mentioned, and other than manufacturing, majority of the other industry verticals and the CFOs that we talked with, they obviously show the robust the growth projections. So while the growth is very much top of the agenda from the CFO standpoint, I think businesses are looking at that through a new lens of value creation, and we will spend more time on this particular dynamic. Nearly 2/3, or 64% to be precise, respondents believe that by implementing the ESG, or the environmental, social, and governance strategies and programs, will improve their long-term financial performance. BDO has been a big supportive of the conscious business, and we in fact, I'm digressing a little bit, we do in fact have a conscious business academy in which every year we invite 25 CFOs and put them through 9 months long educational curriculum on issues relating to the ESG and what these businesses can do. This is, from our perspective, and many will agree that incorporating ESG is no longer optional, really, from how we run our businesses. Support for sustainable developments and stakeholders capitalism, which is essentially a principle that businesses should serve the needs of all of their stakeholders and constituents, and not just looking at purely the financial returns. And that has been the trend even before pandemic. You may have heard about the Business Roundtable, which essentially is an association of CEOs of some of the largest businesses in the United States. They declared and in fact codified this concept in their essentially their initiative and efforts, and declared that that each of their stakeholders is essential, not just the shareholder, but all stakeholders, which obviously includes the employees, the suppliers, the customers, society in general. So there are many stakeholders in a business. So they declared that each of the stakeholders is essential, and the Business Roundtable committed to deliver value or implementing policies that deliver value to all of those stakeholders as well. So that is something which as you can see on the slide, that within the ESG types of initiative and efforts, there are different objectives, and some of the top ones that rise up is, CFOs that responded to this question realized that, brand reputation through, perhaps external reporting is one of those areas where, difference can be made. But while some CFOs do still see that as a, more of a public relation play, but based on a number of data points, we do believe that, the mindset is changing, and more businesses and business leaders are in fact focusing on creating value that, and the return on an investment, not purely in financial terms, but essentially doing well while doing good. And that's a concept that you're going to hear, more about when I focus on the technology sector as well. On the next slide, please, if you move. I think it is probably, well understood, will be well understood by everyone listening to this, that over the last couple of years, few stakeholders have gained more influence than the employees. Between the tight labor market across the US and in fact across the, many other parts of the world as well, we're seeing that happening, and between, in that tight labor market and the historic turnover that the US companies are experiencing, the workers do hold a significant amount of leverage, and they are frankly using it. And across industries, workers are asking for, more engagement, higher pay, better benefits, flexibility, and all of those strategies are being deployed to manage the human capital. So obviously that is something which is clearly very important, and it's not just the hiring of people, new people, but rather focusing on reducing the turnover and the strategies that are being implemented by enhancing the compensation or employee benefits, and trying to invest in upskilling the from a workforce standpoint. So a number of those strategies are in play as well. Next slide, please. I alluded to the supply chain disruption and how that came out to be the highest risk, and it's obviously not just the human capital shortage, but shortage in everything, raw materials, and whether it's the freight capacity, and many of us have seen impact of that, and how the supply chains have been impacted and caused issues for many businesses. I will talk a little bit more about that when we move to the tech focused findings as well. And if you move to the next slide, please, the in terms of overall mid-market innovating to grow and thrive in the post-pandemic economy, businesses are trying and focusing on the innovations. And CFOs recognize that it is critical to adapt to this accelerating pace in how the technology and other changes are taking place. And so laying the foundation for sustainable business, and number of things have changed, and frankly the new norm, nobody knows what that is. That is still unfolding, and the digital transformation that is happening, that is probably the number one priority for many CFOs. And while it is clear from what we saw in the survey responses that most CFOs are not jumping onto in any particular initiative, they are taking a gradual and continuous approach to make incremental changes that can help sustain their businesses in the post-pandemic area. I am going to now transition to more what we heard from the tech CFOs, and I can tell you that, well, I guess this is the 14th year that we have done this this annual survey. I've been involved very intimately in that effort for at least last 8 to 10 years. So this certainly gives us a very good visibility as to how the tech CFOs are looking at the near future and the long-term business prospects. And if you move to the next slide, please. Yes, thank you. So I think tech has been the growth engine for the overall economy for past many years. And if there was any doubt in anybody's mind as to the significance of technology sector as a growth engine for the whole economy, the last 2 years really crystallized that, that message and that vision, and essentially showed that how the technology companies and the solutions offered by the technology companies really kept critical businesses and critical services going as we almost overnight shifted to a virtual world to do business. And without the those technology solutions and the robustness of all the technology, that would not have been possible. And despite those, in the last 2 years, technology sector as a whole has done very well, and some of the results are clear to see. But despite these historical challenges and then successes out of that, it has also brought some monumental changes to tech firms around the globe, and certainly in the US, and a variety of factors that have caused that. Based on the survey that we did by talking to 100 technology CFOs, there are 3 important themes that I'm going to spend more time on, which is the trust factors in the technology businesses. While taxation impacts everybody in all industry sectors, there have been in the last 2-3 years there've been a significant focus on taxing the digital economy, and of course that's very much focused on tech businesses. And what's going on in the last couple of years and what the expectations are for M&A and other strategic transactions, that the tech sector is very much participant, and in fact perhaps number one participant in that. So on this slide, looking at from the CFOs growth prospects, the 8 and 10 CFOs believe that their revenues will increase, which is phenomenal. And a very impressive 69% responded believe that implementing those ESG strategies that I talked about earlier, that will in fact enhance their business. That's good to see, because tech sector really think it's in a prime position to show leadership in that area. And if you move to the next slide, please. I talked earlier that the innovation that is happening in the overall survey as well, and while the innovation is important to all industry sectors, for tech it's essentially is literally the only way to survive, and demand for technology products and services remain very high. And tech obviously has been the biggest beneficiary of the digital acceleration that happened partly due to the crisis situation. More than half of the CFOs that we talked with, about 56%, actually believe that lessons learned and the dynamics that change as a result of the COVID crisis will continue to have a very powerful and positive impact on tech businesses in the long run. So tech businesses are not just focused on bringing new technology tools and solutions to the marketplace, but are innovating as to how they do business as well. So new business models, improving their existing processes and services to really focus on efficiencies, not only for their own businesses, but for all businesses who buy the technology solutions and products. Next slide, please. The trust factor that I mentioned earlier, and while it is clear that in the last couple of years, technology businesses show how they are the backbone of the economy and kept everyone going. Over the last few years, though, it seems that almost every day it brings a new headline, a new story about whether that is the data security or data breaches, or tech sector's role in perhaps the not managing the spread of the information, or some will say disinformation. So so all of that is very much, tech sector is right in the middle of that. So with that, obviously there is an impact on the trust factor for the stakeholders, the society in general, the regulators, the government entities, as to what tech sector is up to and whether or not there needs to be additional guardrails and rules and regulations to help manage all of that. And there are some, survey or thought leadership out there that indicate that the trust factor has really deteriorated, quite a bit in the last few years as far as the technology companies are concerned. And every stakeholder, whether it's a customers or investors or the legislator or regulatory bodies, are really holding the tech sector to a pretty high, perhaps the highest standard than before. And to be successful in the long run, tech leaders are focusing on how their products and services that they provide and the solutions that they have and their operations, how they have an impact on the overall society. So focusing not just on the innovation, but how they can improve, the solutions can improve the businesses overall. And rebuilding that trust is a battle, that is fought at multiple levels. And some of the data points, they were on the slides, on the previous slide that was on, that obviously is extremely important as well. Let me transition into the area of taxation and what we are seeing. And if you go to the next slide, please. In the last few years, there have been a number of changes. In the US, there was a lot of changes that were driven by a Supreme Court case that is referred to the Wayfair, which essentially is taxation for when you don't have a physical presence in those local jurisdictions. And then the OECD implementing or introducing the global taxation strategies, the Pillar 1 and Pillar 2. I will not go into the details. Obviously, you will have the slides in our reports. And perhaps one can argue that it's really the Pillar 2, which is most relevant to the middle market, which is the companies with the global revenue of 750 million. That is the threshold. But I think as these various government entities across the globe attempt to tax the digital economy, and while the main target is the very big companies that are per se not in the middle market, but eventually that cost is going to be passed on to other businesses and consumers. So everyone is going to be impacted by that. So there is a lot of activity that is going on. And in fact, a number of CFOs responded that they do see huge impact of those taxation. And if you move to the next slide, please, so audience can see that how almost 80% of respondents believe that it will have those taxation strategies will have a significant impact on their businesses going forward. I will quickly mention that while that is happening, there is some positive out of that as the harmonization is underway for different countries, as opposed to each one having their own policy, that at least when it's harmonized on a global basis, that at least businesses can deal with a consistent set of rules across various countries and markets that they operate in. So while the overall tax burden is expected to increase, there is something to be said about the harmonization. If you move to the next slide, please. You can we asked, this is 2-3 years since that Wayfair ruling from the Supreme Court that came out, and we were interested in finding out as to how businesses have dealt with those issues after that decision. And as you can see on the slide, that 65% ended up registering with additional state authorities on a voluntary basis to help manage the exposure. This certainly has an impact on where and how you hire the employees and where you place them, because all of that does have an impact on how what the total tax liability and the total tax expense for the technology businesses are. Some of the data points are on the slide. I'm not going to read through that. The point obviously I think will come across quite clearly by looking at the data. And if you move to the next slide, please. Again, I will not spend time, but there are multiple steps in managing that compliance risk resulting from the new regulations, and those are the 6 key steps that we have outlined that businesses are dealing with. On the next slide, and this is really top of mind for all types of businesses, and tech especially, because technology sector does rely on the skilled workers in terms of innovation and the design of the new products. So this obviously, with the COVID, there's been a great deal of focus on mobility and flexibility and where people work, and it has shaken up the market quite a bit on an overall basis as well. And I think when we ask that questions as to how the companies are dealing with, so attracting new talents is something that is of paramount importance, but equally important is, as you can see, is retaining key talent and managing the global or mobile workforce, I would say, and on top of dealing with the overall shortage of the skilled workers. So those are some of the challenges that are top of mind for the CFOs. Let me quickly move to the next slide, next section, the outlook survey in terms of the deal making. And as you can see that, in the last several years, the M&A transactions and the strategic transactions have been really going on at the breakneck speed. And the expectation by 2022 is not any different. 65% of the tech company CFOs anticipated that they will be involved in some element of M&A, either on the buying or the selling side. And those CFOs identified going into the new market segment or enhancing their digital solution and services are the key factors behind in that deal making. The deal making on the next slide, please, is not just M&A. M&A is certainly part of that. Attracting the private equity or venture capitalist investments, or forming joint ventures, or figuring out what is the best way to have a carve out or divestiture. Those are very important elements as well, and CFOs continue to stay focused on that. On the next slide, when we asked about the areas as to how and what is being done to maximize the deal value, so or the improvements which can be made, so the valuation and price negotiations are what the number one factors. Identifying the right targets and then capturing the synergies is extremely important, and that's failing to do that will obviously take away the valuation, the premise of that investment. So there is a lot of work that needs to be done in terms of capturing those synergies. I think I'll pause there and request Stephen to go over the healthcare finding. So Stephen, please take it away.
Thank you, FTAB, and a warm welcome to all of you. I'm presenting to you from sunny Southern California, and I'm sure that can be a good analogy for the healthcare segment. Certainly healthcare, and as I get into the results of the survey, you'll see a tremendous dichotomy. It certainly is a tale of the two cities. So on the one hand, you see a tremendous optimism. On the other hand, there's a tremendous gloominess, and hopefully I'll be able to explain the reasons for them. If you'll just advance the slide, please just talk quickly about, yes, okay. So as I mentioned to you, yeah, there are three main themes here with regard to the healthcare CFO survey. There's obviously a tremendous amount of strain on the system. We're seeing challenges such as the continued labor shortage and supply chain, pretty much the same as what FTAB described in the previous sections of the presentation. Certainly, investment is a big part of what healthcare is seeing. We're seeing many more CFOs pursuing transactions, certainly this year, and this is a trend that has certainly continued. And then, of course, the regulatory environment is a major concern for CFOs. For those of you who have been healthcare CFOs, that is, those of you who have been in any way or fashion involved with healthcare companies, you'll probably have been made aware of, obviously, the provider relief funds, which were a tremendous boon for healthcare companies during really the dark days of the COVID pandemic. And so the treatment of those funds, both from a compliance and regulatory standpoint, are a tremendous thorn in the sides of healthcare CFOs. So in summary, we're seeing a tremendous amount of optimism. There are enticing opportunities for deals and investments in areas like behavioral health, but it's not enough to just focus on these opportunities. There's going to be a lot of hard work ahead to contain the costs of the healthcare industry. Could you advance the slide, please? Okay. As I mentioned, as the COVID-19, could you go back one slide? Sorry. There we go. Okay. As the COVID-19 pandemic lingers, there's obviously a critical eye that is focused on the healthcare system. You know, there were a number of issues that existed pre-pandemic. Those issues, for example, the containment of costs and the move to value haven't gone away. In fact, the COVID-19 pandemic has, in fact, exacerbated many of them. And this has obviously given CFOs a renewed sense of purpose, you know, coming out of the pandemic, and hopefully some optimism for future years. Some of the major themes that we're dealing with over here, in terms of, we're going to obviously talk about the sustained strain now, is how the strain is, how CFOs are looking to mitigate the strain. One is obviously investing in the consumer experience. Secondly, retaining talent, managing wages and benefit costs. And thirdly, obviously controlling and managing the supply chain. Could you advance, please? Okay. Overall, our survey found the healthcare financial and operational snapshot of the industry, I guess, was towards the end of 2021. There were encouraging signs of progress. 63% of CFOs said that they were thriving. 82% expected to thrive within the next year, and 73%, as you saw previously, are expecting a forecasted increase in revenue. But 34% said that they are just surviving. A couple of years ago, one of my colleagues said to me, in terms of the healthcare industry, there's going to be $3 trillion made in the industry and $3 trillion lost. Just depends on what side of the industry you, as a healthcare provider, payer, vendor, are going to be sitting on. So, as I said to you, healthcare organizations are bullish for profitability, but it's not going to come without an effort, okay, including strategic cost reductions. Could you advance the slide, please? All right, and so let's just talk a little bit about that investment in consumerism. So consumerism in healthcare, as you know, is a relatively new concept. Previously or historically, patients were really, and I'm going to use a kind of a crass kind of example over here, were treated as a piece of meat, really kind of pull that or drag that between payers and providers. Well, those days are now gone for good. And I think the COVID pandemic certainly exacerbated the need for patients to, and patients' requirements to be treated as consumers more so than ever before. And so healthcare CFOs are looking to invest in improving the patient experience, expanding service lines, and most importantly, restoring patient confidence. And the restoration of patient confidence is paramount, given that a tremendous amount of confidence was certainly lost during the COVID-19 pandemic. The question is, why is this so important? Why is this so vital? Firstly, patient retention capitalizes the lifetime value of the patient. Okay, a happy and healthy patient is of much more value to a healthcare organization than the opposite. And certainly, you know, not to kind of focus on healthcare just purely as a business, but certainly it touches every one of us, and certainly we personally would like to be healthy and long-lived also. The other thing that's important with regard to the patient experience is referral retention. Keeping referrals within your network, within a downstream system, controls and contains revenues. That's important. It serves to improve care coordination and quality management to effectively compete in the new risk-based world, in the value-based world. And then lastly, assuming patient responsibility and regaining confidence has obviously become a significant part of reimbursement. And patients have realized this and frankly become a lot more discriminating. Could you advance, please? So the renewed focus on value by CFOs, as I alluded to earlier on, and it's really important for me to just remind you quickly what the main drivers of value are. In short, as I said to you, value-based care is going to come out of the pandemic with renewed vigor, with a tremendous amount of impetus to create value, simply because obviously patients are becoming more discriminating. And I guess the best description of value in the healthcare context, in terms of quality of care, is the best care for the lowest possible price. Okay. Other important drivers of value are access to care, which we saw this being exacerbated by the pandemic. We saw limitations on access to care, and we saw a whole subsector being developed by the as a result of the pandemic, in the form of telehealth or telemedicine, if you will. So access to care is tremendously important. Communications, being able to communicate with your patient, is vital, and as an adjunct to the whole telehealth and digital aspect of it, increasing digital tools to enhance patient and provider communications. Certainly customer service is paramount. As I alluded to, no longer are patients to be treated as a piece of meat. and then more recently, empathy being really based on the groundwork of health equity and ensuring that the right populations get the right level of care. To create this outstanding experience and to keep patients coming back, CFOs are considering the following things. They're obviously demonstrating and communicating the quality of care, creating an atmosphere of safety, particularly where patients need to seek care in person. As I mentioned to you, telehealth and portals are becoming much more prevalent, and health equity, as I mentioned to you, is vital. And by the way, I just want to give a quick plug over here. When you guys do get a chance, take a look at the BDO Health Equity Survey, which was recently completed. And I would suffice to say that that's probably one of the first health equity surveys performed in the country ever. So take a look at our website. It's there for you. Could you advance the slide, please? Okay. So as I said to you, even though there's a significant amount of optimism in revenue and none too soon, there are some clouds that are gathering on the horizon. Okay. This last year, 42% of healthcare organizations actually defaulted on bond and or loan covenants. All right, and 30% of the organizations had less than 30 days of cash on hand. Now, given the backdrop of the pandemic and what we've all been through, and how certain parts of healthcare were significantly curtailed by preventing, in order to prevent the spread of the virus, that in itself isn't surprising. However, what is surprising is that 1 in 4 CFOs are concerned about the risk of default in 2022, even though they didn't default in 2021. And what that's telling us is that the healthcare industry certainly is not out of the woods yet. However, an admirable job has been done addressing the challenges in 2021 and prior, but the struggle will continue, especially now that it appears that much of the government funding is going to slow down or stop. When looking at the subsectors, it's no surprises that both the outpatient and ambulatory surgery center industry, as well as the long-term care and post-acute and home health industries, were the hardest hit. We all know that these subsectors were tremendously impacted by the COVID pandemic. What is surprising, though, is the well-heeled academic medical centers and the larger hospital and health systems themselves have had some pretty significant strain, and that is tremendously concerning, because that is the engine of future healthcare innovation. Could we advance, please? Okay. Now, as we mentioned previously, one of the significant strains and stresses on the industry is that of wages and benefits. We know that healthcare clinicians and frontline workers and staff have prevailed through unprecedented challenges of the COVID pandemic, but they haven't emerged unscathed, and nor obviously healthcare organizations. Clinicians and healthcare workers are now leaving the industry in droves. Okay, there's a significant amount of burnout. There are mental health concerns, and these issues are going to linger for years and years to come. Obviously, the greatest area of workplace strain that we're seeing in the healthcare industry is nursing. In fact, one of our business partners did a survey, and they indicated that in 2021, the year-on-year inflation related predominantly to wages and benefits of clinical and healthcare staff was running around about 14.5% year-on-year. And when you kind of overlay that into the already fairly thin margins that many healthcare providers have, that is going to push many healthcare providers into the red. Healthcare nurses specifically have chosen to pursue travel nurse options, and instead of being employed by hospitals and other providers, many hospitals are now understaffed, and physicians, in fact, are being pushed to take over nursing roles. And we think that this burnout trend is going to continue. So CFOs are tremendously focused on this. They 42% are focused on addressing the burnout issue, what's specifically causing the burnout. 40% are focused on retaining key talent. 40% said that retaining new talent is going to be a challenge, and 36% said that employee wellness, health and wellness needs, in fact, are a challenge. So in terms of the where dollars are going to be spent in 2022, that there's no surprise that they're going to be, healthcare CFOs are going to be investing heavily in improving the lot of their employees. Could you advance, please? Obviously, another surprise, not a surprise, should I say, is the global supply chain. Healthcare organizations, providers are significant users of supplies, pharmaceuticals. We know that historically, many of the supplies and pharmaceuticals were manufactured overseas, and so there's a renewed focus on supply chain. A whopping 84% of healthcare CFOs say supply chain is a major risk of disruption in 2022, and this disruption could in fact threaten operations. And it wouldn't surprise me that the global socio-political and economic environment that we're experiencing now with regional wars isn't going to necessarily be helpful in that regard. Certainly, the high cost of materials, transportation, building in protections and redundancies will be a challenge to many of these organizations, and a challenge to renewed profitability. Let me just quickly advance. Let's talk. Could you advance one? There we go. Advance to the next slide, if you will. So, okay. So, as I said to you there, the investment in healthcare has continued unabated. It's a hot deal-making year, and just in tracking transaction outcomes, 25% of CFOs said that their organizations are going to plan reorganizations or restructuring. But most importantly, many others said that they're going to either continue to pursue joint ventures, M&A transactions, either divest or invest, partner with private equity firms, and of course, most recently, we've seen a new trend in healthcare organizations pursuing SPAC transactions and becoming publicly traded. So 29% of healthcare organizations said that they're going to consider acquiring physician practices, and 37% said that they're going to continue joining clinically integrated networks, which is up from 30% in 2021. The main areas of concern over here are the FTC, making sure that many of these transactions don't fall foul of any of the anti-monopolistic legislation, and time is going to be of the essence for healthcare companies to pursue SPAC transactions. Based on my understanding, it sounds like there's pretty much a 2-year time frame for many of these SPAC transactions, and the window is starting to close. Could we advance, please? All right. In terms of some more detailed bets on the future of healthcare, technology is going to be paramount. Okay. Historically, technology has been underinvested in healthcare, and so now there's a tremendous time to catch up. Okay. Also, 42% said that they would be looking at product and service expansions to meet that consumer expectation, and 40% said that they're going to be transforming their operating models. And by that, we mean changing from possibly a fee-for-service type structure to a more at-risk based or value-based structure. Could we advance, please? In terms of the top areas of innovation investment, as I mentioned, to technologies, first and foremost amongst healthcare CFOs, 47% said that they'd like to use technology to make improvements to the existing products or services. 41% said that they wanted to improve greater internal efficiencies, and then 41% also said that they're looking to use technology to collaborate with partnerships, basically tech-enabled partnerships. One more slide over here. Primary care is on the decline. Historically, primary care has been a favorite place for investment. This year, certainly 2022, has seen always expecting to see a significant decline. And one of two reasons for that are, it's already been significant. There's been a significant amount of investment in the space, and prices and multiples are going up. And a more general comment is, of course, the fact that resources in order to get many of these deals done are at a premium. Next slide, please. In terms of care investment plans, you'll see that specialty services such as oncology, cardiology, and dermatology are top of the pops over here, as are behavioral health and telemedicine, while primary care has taken a back, is on the back burner. The other thing that I'd like to say is that instead of primary care, urgent care and ambulatory care is also garnering a lot of attention. Okay, can we advance, please? I want to just make sure that we don't run out of time here. I think, from a regulatory perspective, the healthcare industry is really on shaky ground. There's a slew of new legislation, and healthcare resources have limited abilities to ensure compliance with many of these complex regulatory environment. Next slide, please. Okay. Many say that obviously the regulatory environment is a major risk. Data privacy is also a high risk, and obviously additional taxes are of concern. Could you advance, please? Okay, this one's important. Provider relief funds, ESG, expiring HIPAA, and stock waivers, antitrust are of significant concern. Medicaid expansion is probably the biggest concern. Price transparency, also significantly on the minds of CFOs. And of course, since we fielded the survey, we've seen the No Surprises Act join the ranks of all these slews of concerns. Could you advance, please? As I mentioned, to the provider relief fund, of tremendous concern. Mistakes in provider relief fund reporting can be expensive. It can result in funds having to be paid back, and this is something that a lot of healthcare providers can least afford. Next slide, please. And here are the top 5 financial reporting concerns. It's important that I explain them in the backdrop of what's happening in the industry, because there's much more sophisticated capital, much more government funding that's flowed into the healthcare industry. There is now a demand for better and more timely reporting. This is becoming a prerequisite. And of course, healthcare CFOs ultimately responsible for this are concerned about their outdated systems, the inability to meet deadlines, fines and penalties, and of course, reporting to more sophisticated boards, and the lack of resources, guys. That's once again another challenge that keeps on reoccurring. And how are they going to meet these challenges? If you could advance to the next slide. And this is my last slide. I'm sorry for running over here, but Certainly, once again, technology, 44% are looking to implement their new reporting systems, 44% are looking to implement data analytics, and 41% training of staff and reporting responsibilities. And so that, ladies and gentlemen, brings us to the end of the healthcare segment. I hand it back to our hosts.
Okay, Stephen, Aftab, thank you both so much today for all of this valuable, important information and all of these great insights. For everyone joining us today, just a reminder, we've reviewed the insights from the BDO CFO survey, focusing on healthcare and the technology sectors. But the CFO survey also included insights into 4 other sectors: energy, life sciences, manufacturing, and retail. So a lot of good information here. We will be sending out a link to the report to everyone who RSVP'd to this program. And if you have questions, please feel free to reply to that email with the link to the report, and we will get your questions answered. Again, thank you so much to our presenting sponsor BDO and our supporting sponsor BMO Harris, and to our speakers. Again, a lot of good, valuable information here. Thanks to everyone for joining us today.